All right, we're live. I'm back today with Arman. Arman, how are you doing today?
I'm very well, thank you very much.
Excellent. And so some of those, for those who, do follow the show, you probably remember Arman from our episode last week. It's a lot of people are checking it out. So thank you for that time last week. And I know we had some interesting topics we wanted to cover today. So Arman is a mathematician, a hedge fund manager, and more recently he brought a paper that he's written to my attention that has been living rent-free in my brain since I came across it. And it's about speaking really on behalf of those who cannot speak for themselves. Maybe I'm butchering the order there, but Arman, why don't you tell us a little bit about it? Kick us off. I know we're probably going to swerve and take some different detours along the way like we normally do, but maybe help us frame the conversation a bit.
Sure. There's a society that I'm starting called the Wakanskan Society. Wakanskan is the Lakota Sioux word for those who cannot speak for themselves, and that is forests and the squirrel and animals and fish and rivers, cows, and so on and so forth, voiceless ones. Also, structurally disadvantaged people who are born just not capable of being in this kind of a world. They're just innately, you know, not able to deal with the structural, they're structurally disadvantaged. So in the Lakota Sioux culture, the highest calling you can have in life is to speak on behalf of those who can't speak for themselves, right? Because they don't have a voice to argue, not to be driven in minus 30 on a truck to a meatpacking plant and then be put to death. They can't argue their case, right? They can't argue their case that they're housing thousands of animals and that they shouldn't be cut, a forest to be cut and leveled, say on Vancouver Island. So those are what the Lakota Sioux call the voiceless ones. And so I'm starting a little bit of a society that's basically going to be based on 18 axioms that are going to be that are up on the website, and these axioms uh, put together a foundation upon which how we view the world. Okay, and I can very simply explain that because it segues into equitable liability, which is what you wanted to talk to me about. Okay,
Sure, let's go into that.
so this is the most important thing for human race to understand today. Okay, this is the essence of Maya in Mahayana Buddhism. Okay, Mahayana Buddhism talks about the world of words. So the illusory world that the Buddha says that we live in is this world of words in our minds that has reality only to the extent that we have a language faculty in the brain to process them. And so the root cause of suffering, according to Mahayana, is our erroneous belief that this world of words has actually any material validity and existence. And so the problem that exists today is that the Wamakanskan and human beings who have a voice are suffering at scale because of these, it's like the little prince in the movie, the little prince from the 70s. A little kid comes down from some planet and he says, what are borders, right? What is a border? And for some bizarro reason, human race has locked itself into believing these illusory notions that names such as Canada, America, China or mine or yours or debt or all of these things that you can't feel have any kind of material substance. And so we have subordinated perhaps the evolutionary process of planet Earth and are messing with it on the account of something that has zero material substance. You understand? So here's the problem. In any complex system, a proper subset of that system cannot possibly explain the whole. That's called the Occam's razor. Okay, that is a traditional, axiomatic truth in science. So a human mind evolved on this planet on rainwater and sunlight to evolve this intellect that we have, and it cannot possibly comprehend the whole of the system that it lives in. It can only explain how it perceives. It cannot explain what the thing is. You understand that point? So in computational, if in computer science, there's all kinds of fancy papers about this, that a universal Turing machine can just compute what's computable, and what's not computable it can't compute. So the human mind, the scientific method, only explains how we think of something. It doesn't explain what the thing is that you're trying to model. But the error of human race is I don't mean anything bad by this, but the arrogance that we think that our mind is capable of actually explaining the phenomena. We're only explaining how we explain. And so that's actually also Mahayana. And that's, that's a very deep statement. So the problem here is that we are basing our policies as if we can understand what the short-term or long-term impacts may possibly be in this interconnected web that has been evolving for 4.5 billion years, and are messing with it perhaps irreparably. All right, so here's a case in point. I mean, let's talk about the human species. Carl Jung wrote that in his entire career, Sonny, in his entire career as a psychiatrist, where he traveled to areas where human beings lived according to the way they evolved, okay? He found exactly zero of any psychiatric disorders. No depression, no overeating, no anorexia, no nothing. And that astonished him. So, Sonny, it is a fact. He found exactly zero cases of any kind of psychological disorder in those species that lived how we evolved today. Now you look at how how the human species are today. And for example, I read that Netflix is putting into the contracts now that if you're going to make a TV series or whatever, you have to repeat the plot 3 times during the episode, because people are on their phones and they have no attention span. Remarkable psychological disorder. You look at the levels of depression that people have today. You look at the fact that today people don't really read, they scan, and anything more than 2 sentences that you receive in an email, people jump out of the window or something. Our discourse, the complexity of the human discourse, has collapsed to critical levels because of mobile computing and computers and so on and so forth. And this is where you hit, and I don't want to spend too much time, but this is where you hit upon this thing called Shannon entropy. All right, so if I give you Moby Dick, I can only compress it so much before it loses substance, and you have no idea what the book is about. You don't understand the depth of it, the subtleties of the characters, and what the message is. The problem today is everyone wants a 2-page or a 1-page summary of something that is extremely complicated. So our species is losing critical thinking and focus. So we are in effect, Sonny, already witnessing the effects of messing with the evolutionary process of a human mind, never mind the evolutionary process of cows and pigs and snakes and forests and so on and so forth. Okay? I mean, when you build a big old road in an interstate somewhere, you've divided 2 halves of a deer species and so on and so forth. So these things you can't possibly model. So the problem that I'm trying to explain to people, and this is where my axioms come in, is that let us not pretend that we can possibly comprehend what's going on. So the safer course of action is to say, look, because we don't know what the tail risk, what the actual possible damage could be that is only measured in millennia, right? And then it's too late. The safer, more prudent course is to stop playing God and be risk averse and be kind to the Wamakanskan, because what we do to them, we are doing to ourselves at the same time and in equal measure. Okay. So that's kind of where I'm coming from. These are axiomatically correct things when you look up complexity theory, information theory, and computer science. It's not something that I've divined. Okay. Just let me illustrate. Pretend that the space of all things we can possibly comprehend is like a sheet of paper, and I'm holding a pen and there's the sun. The brain is only looking at the shadow. And so all these scientists are arguing about the properties of the shadow and how the shadow is going to move. And then they make policies to govern their society based upon the shadow. There is no way that they can comprehend that there is actually a pen and a sun, and they're only talking about some projection of reality on the space of all strings that are computable by the human mind. Okay? So I hope that makes some sense.
Uh, Oddly, yes. I actually understand everything you're saying. I don't know about the listener. We'll find out. So you call this manifesto "How to Fix the World with a Stroke of a Pen." So walk us through that moment when this idea crystallized for you, right? So what made you realize that limited liability, right? Just to kind of go into the crux of the
Yeah,
paper, what limit was a root cause rather than just a symptom? And maybe walk us through that as well, these externalities that you speak of and the tail risk, right? I know you touched on it in our last session
sure.
together, but just maybe yeah, just quickly if we can.
Sure. So now we're going to leave the topic of being risk averse and not damaging the evolutionary process we can't possibly comprehend for the Wamakanskan. And now we're going to shift onto something very concrete that I wrote 20 years ago, how to fix the capitalist system that the human race has apparently chosen as the way that they want to live. Does that sound fair?
Yep. Can you see my screen?
I can see your screen. So you have my society, what do you call it? My little statement about it. Yeah, so that's what is kind of where we're coming from.
How
But
can
then we're
people
going
access this doc if they want to see it afterwards?
so it's wamakanskan.org.
Perfect. I'll
So
put a link in.
everything on that website is going live tonight, and it's going to be the founding axioms, the founding statement, and so on and so forth. So,
Cool. Okay, so keep going. Yeah, I didn't mean to interrupt.
all right, no problem. So do you want to screen share or do you want me to? Yeah, okay, good. All right, let's rewind. In my career, as I said in my first recording, I have had a cross-disciplinary, interdisciplinary journey towards computer science and math and finance and so on and so forth. And so as a freshman, for example, into finance, you ask, why is this and why is that? Like why are things this way, right? That's what we're supposed to do as a species, right? And so I came across this notion of limited liability, and I was very interested in it, how it came about, and so on and so forth. And this I would put into late 90s. Okay. So in my PhD dissertation proposal to my committee at Duke, at the Fuqua School of Business, I was in a PhD in finance. This paper, Equitable Liability, was one of the 8 chapters, and it was defended, and the committee uh, found it highly controversial for some bizarre reason, but nobody doubted that it fixes the problem. Okay, so let me take a direct question from you. So you asked me uh, how how I came about it, right? All right. So back in those days, there's all this environmental regulation, carbon taxes, COP 1, 2, 3, 4, 5, people meeting about climate change, so on and so forth. And so I came upon this book called Cancer Stage of Capitalism by McMurphy. And I read it. And it talked about money sequences and how money flows in order to maximize the objective functions of money sequences, which is to generate money, to generate return. And so I started to think about the problem, and it's very simple to explain. Sonny, you have a system. That system has an objective and constraints, optimization, right? Every system has objectives and constraints. And if you constrain a system, then the performance of that system, by definition, will be less than the performance of the unconstrained system, right? If you have to pay for filters to clean the rivers, then you're going to make less money than if you didn't, right? So you you will generate greater returns um, if things are unconstrained. So if you look at capital doesn't care about anything. You can put all kinds of regulations and things. Capital investors, they're going to shift their money where they're chasing returns, not only uh, by their will, but by their contracts. If you are a pension fund and you are a pension fund CEO, you must do certain things. You know, clean rivers be damned, right? I mean, you're going to be chasing returns because you're trying to generate returns for your investors. If you're a hedge fund, same thing. So you have masses, trillions of dollars pressuring companies to increase profitability. Everything else is a constraint. So any system in the world is going to try to shed constraints to maximize the objectives. And so you have a tug of war, right, between constraints, regulations, living wages, stakeholders, Main Street versus Wall Street, right, which was popular 20 years ago. Main Street is a constraint, Wall Street is the objective. Now, there's nothing wrong with generating returns, but the problem that I have is when Main Street blames the CEO and he's so evil because he's doing all these things and they have no idea what they're talking about. The man has a contract. The contract literally says you must do this to maximize our profits. And so he can't do anything else. The board also reports to shareholders, and their job is to do this. Their job is to make sure that the CEO does his job. So it's all about objectives, objectives, objectives. And so then I looked at it and I said, well, why is this way, this way? What can we possibly do? What is the problem that is making money chase things and putting it at odds clearly with the interest of the planet, right? And I came down to, oh, wait a minute. There's a free lunch. There's an arbitrage that exists for no good reason whatsoever. When you incorporate a company, Sonny, right, as you well know, the law says you are given limited liability on the shares of your company, right? So no matter what you do, right, in life for that company, the most you can lose is what you've invested. You can't lose more than that. And so if the company does something disastrous, then those costs are passed onto the society. And so nobody cares. Let's not mince words. Pension, yeah, go ahead. Go ahead.
So here, I think this is really interesting what you're bringing up, by the way. But you said that so this concept of limited liability, right? I mean, it's called an LLC. I think a lot of people don't even really read the actual words and what it means, but a corporation is exactly that. But you said something. You said for no good reason. So I want to again, I am not a historian. I didn't even go to business school. I'm an engineer. So I'm closer to. But I wanted to. So what I heard is that back in the day, before we had corporations, let's say decided to start a business, okay? I go and I start this business, and all of a sudden the business, for whatever reason, fails. It could be in these olden days that because now let's say, owe you money because of my business that went bad, You could, essentially hire my children to now work for you. I become a slave to you. So there's all these like repercussions and negative externalities that would become, and as a result, people wouldn't even start a corp. They wouldn't even start a venture. They wouldn't start a company because the risks were just far too great. And one of the ideas behind the corporation and the LLC is that you could have essentially people take on risk. Now, I agree that it's gone a little bit haywire, and now we're living in this world where no one cares about the rivers, right? So, but I wanted to push back on that is that there was probably a reason as to why this corporation idea came about, is that so people could take risk and not, indebt their unborn children, have to go through processes that I'm sure in the medieval days existed. So, what do you have to say about that, yeah, Arman?
Yeah, so I'm not arguing against a person having limited liability. Okay, like Lloyd's of London is an unlimited liability company. Literally, somebody rings a doorbell of some wealthy guy every now and then, and he has to cut a check for a big loss, right? So companies do exist that have unlimited liability. I'm not arguing against limited liability. I'm just saying, why is it free? It's just granted,
Mhm.
right? So let's talk about that. It is a costless grant to you to have limited liability. Because it's costless, you don't have any pressure of what you make, how you make it, and how much you pay people. Let's suppose in an alternative universe, the world was this way a couple of hundred years ago, right? All right, Sonny, you're incorporated in a company, and what do you want to make? Well, I want to grow flowers. Okay, that's lovely. Um, the guy calls up an insurer, an underwriter, and it says Sonny is incorporating a flower growing company. And the insurer might ask, well, is he using poison? No. Okay. So I will charge him $1 to give him limited liability per year. And now you've paid for it. Now let's say the guy asks you, what are you making, Sonny? What are you incorporating? I'm incorporating a landmine company. Uh-huh. So now I call the underwriter, and the underwriter says, well, limited premium on that is $7. So it is more costly to you to get that insurance, right? To give you limited liability for a cost.
Got you.
This is the critical part of equitable liability. No one says you shouldn't have it, but why is it free?
Got you.
Because a free limited liability creates a perverse scenario which is playing out in the world today. If you had a cost associated with it, then here's what happens. Let's say I'm a pension fund manager today, right? And I'm looking at all these stocks, what to invest in. And every stock has a price, and every stock also has a limited liability premium on top of that price that I have to pay an underwriter in order for me as a pension fund, because I'm the shareholder, to give me limited liability. This is not something the company pays. This is something the shareholder pays. This is a shareholder liability, shield. If you're going to be owning shares in a landmine company, you are on the hook unless you insure. And then the government say you have to insure. And therefore, now what happens is the optimization. I have turned constraints into objectives because the CEO now says, look, if we put filters and have a cleaner river, there's less liability. Our shareholders' limited liability premium is going to go down. Therefore, our returns are going to go up because I built this in. Boom! I have solved the problem. I have embedded constraints into objectives. What constraints? Main Street, right? Livable wages, clean rivers, not making weapons, and so on and so forth. All the things that could potentially expose you to liability. And the beauty of this model, Sonny, is that what is the price of the premium to give you limited liability? Well, it's set by the market. Aha, it's a market-based solution. Therefore, the price of limited liability will be fair and rational and will trade on some secondary market and people can trade those policies. Now I've created a massive market for insurers, which is highly uncorrelated probably to what they're doing, and that's good for hedge funds, blah, blah, blah. It's like the solution just works. But the point is, the price that you pay as a shareholder is commensurate with the potential uh, problems that your products might cause to society or your enterprise.
So
That's it.
work through that river example, right? So how on earth do you put a cost to animals dying? Like, do you just work that out and be like, well, if there's X number of fish in there and someone could have fished it out and eaten it and sold it at a Japanese restaurant, and therefore, I mean, like, how do you quantify clean water for your children and, just things like clean air? Can you work that out a bit more for me?
Yeah, absolutely. 7.5 million brains that work for insurance companies come up with lovely formulas that give you a fair market price, right?
Hmm.
Like the solution works out itself over time. If they misprice it and
Gotcha.
fish dies and eventually they go, "Oh, shy, shoot, I'm on the hook for more than what I thought I would be," then they're going to augment that formula and it will be a fair market premium. The problem that we can't possibly have as a society anymore is to socialize costs to the society of corporate malfeasance or any malfeasance. I don't like using the words corporate malfeasance. Corporations are not evil. There's just a bunch of people in the building, but they have contracts they have to honor. And so they can't do anything until I make those constraints into their objectives. Now the CEO can put a filter onto the river voluntarily, right? So you asked a great question. How does the mechanism work? Well, you sign a law and it says we are going to be charging for insurance premium and it's mandated that you have to buy it. So no more limited liability for free. You have to purchase insurance. Then you go and you get to the regulators that regulate the insurance industry and they say, you're approved to underwrite this risk. Now go and figure out the formula.
Are things like carbon credits a step in that direction? Like, are you in agreement of those, or do you think those fall apart at one point?
So no, carbon credits are a constraint on the system, right? Like they're imposing a cost on the company, and the problem there is like there's a great book, Jane Connolly or somebody, Carbon Credits Are Crap. That's the title of the book. Um, no, they're not crap. I mean, I actually was involved in Canada in the Emissions Trading Commission. My platform was recommended by Lord Axworthy, who was our foreign minister of Canada under Trudeau, to trade emissions credits. So I'm quite familiar with them. The problem is that they're externalized. You have to internalize them so that the companies want to emit less because the insurers have to pay trillions of dollars eventually, and you what do you call it, tokenize all this thing so that liability is traced through time. So eventually, maybe 70 years later, somebody might send you a bill because you've insured that company against emissions 70 years ago. So it's all kind of broken down. So all of that exists. That's not a problem. um,
Cool. Hey, Armand, so I know we're already like kind of 30 minutes in. By the way, I'm happy to do a part three with you as well. But I mean, I don't know if we can get through all of I had like a whole bunch of questions lined up, but do you want to
why
maybe
don't you rapid fire them? Go
rapid fire
ahead.
them? Okay, so I think you already touched on my second question, so we can go past that one. So under equitable liability, shareholders pay premiums to underwriters, right, who then essentially cover the catastrophic loss, right? So how is this different from just having better regulations? Uh, yeah, from
So
just
regulations
regulating.
are external and they're a constraint, and then corporations lobby when the new administration comes and they take those laws away, the rivers still get poisoned, right? So it's different because it's internalizing this as the objective. It's now the objective of the company not to poison rivers, as opposed to new administrations elected, all these lobbyists come and they sign the law away. Because remember, it is a natural state of a system to shed constraints as strong as humanly possible. right? They don't want them. They're lobbying against them. Arctic Wildlife Refuge, now you can go drill for oil because these laws have been rescinded and so on and so forth. My solution is permanent.
So you talk about this like reversal of burden of proof, right? Where you essentially get the companies to prove they're not harmful to get lower premiums. But a lot of people push back on that and say that's an impossible standard. So how would a company actually demonstrate that it's safe?
Right. So that's a different part of the paper. So the paper is mechanism of equitable liability. What you're talking about is, can I make a product? Right? So am I allowed to make a product? And then what is my liability premium for that particular product? So there's two kinds of products. And I'm sorry, there's two kinds of things in statistics: type 1 error and type 2 error. Rejecting a hypothesis that's true or accepting a hypothesis that's false. You don't want that, right? So sometimes it's safer to give a bunch of false positives, right? Like, do you have AIDS? Well, it's better for me to tell you that you do, and then secondary tests show you don't, than it is for me to tell you that you don't have it. Now all of a sudden 100 people have it, right? So you have to gear what you're doing. And somehow drug companies must prove their drugs safe before they can sell them. Alas, gasoline companies could put lead in gas and not have to prove themselves safe. And so there's a double standard. And so what I'm advocating for, and this would lower liability premium by underwriters, is that you must prove your product harmless before you should be able to commercialize it. If you don't, well, the underwriters are going to penalize you for that, and they will assign a greater liability premium. So there is an incentive, Sonny. If you have my system in place of equitable liability, there's an incentive where tobacco, lead in gasoline, or whatever kind of behavior where they're allowed to sell it first is shifted slowly towards proving harmless first before they can poison a bunch of people, right? And so that's the lovely incentive that the equitable liability premium provides companies to actually prove themselves harmless before they are engaged. You understand?
Yeah, very, very interesting. So, okay, so I guess you talk also about this like risk heat map, right, for regulators.
Yeah, let's do
Can
that.
you
So,
talk about that a little bit and how market signals would inform government oversight?
yeah, so if you have a bird's eye view onto the sizes of limited liability premia and you're a regulator and you see all of a sudden that the market is pricing a certain sector way more than before, then you can zero in and see what is going on in this particular industry that the insurance company knows that me as a government might want to do something about, right? And so that's what I talk about a heat map, because you can see the history of the premium of equitable liability as a security that is being traded, right? So all of a sudden, if the spreads widen, that means boom, there's a risk there. Let me give you a concrete example. Okay, AIG. Under my mechanism, there is no way the housing crisis could have happened. Why? Because AIG's shares would have carried some kind of a limited liability premium, and the underwriters of AIG would, and Lehman and Bear and everybody else would have been in their books, and they would have seen the exposure and they would have priced that accordingly. So if AIG carried, I don't know, $1 trillion worth of subprime, there's no way they could have. The risk premium will be way too high. So we would have caught the housing crisis because of the underwriters. You understand? And because companies know this, then they would self-police and not take that kind of weird risk. I am personally offended as a finance professional that '08 happened. There's no way it should have happened. It was hubris and, whatever. So Under my mechanism, this would have never happened. Okay.
We've done this is now going to be our second session. I had told you a little bit about obviously my past in terms of my involvement with robotics, AI, but also Bitcoin. 2000, we kind of touched on it at the end of the last interview, but Bitcoin was created as a response to essentially these externalities that exist in the financial system, which is that people can, when banks do well, they take home the profits. And when they did poorly, they turned to the rest of us and said, hey, bail us out. See, that was literally why people like myself and a lot of the younger generation gravitated towards Bitcoin, right? Because it was our answer to money printing and to the fact that, we got stuffed the bill when things went poorly. So can you kind of tell me, because you ended up on the other side of this Bitcoin argument, right? Which I found surprising because so much of your work, believing in decentralization and getting rid of third, middlemen, and even the work you're doing today strikes me as in line with the Bitcoin thesis. So what am I missing, Arman?
Three things, right? We're missing three things. So first of all, how old are you? Roughly 40
46.
something, 46. Okay. So how do we want to go down in our lives when you're 90? You know, do you want to be able to say that you have seen Italy and helped a man maybe not commit suicide or something? What have we accomplished? Or were we locked into a frenzy chasing some kind of a digital asset and you go, Jesus, I have spent 40 years of my life. This is my personal choice, right? I can't possibly be engaged in this digital thing because I only have so many seasons to ski and I want to live a certain way, right? And so as an ethical standard, I have chosen not to engage it's not an asset, first of all. It's just a digital thing. And so the tail risk of this digital thing, it has no reality. There is no asset there. There is no coin. You can call it a turkey, you can call it a Bitcoin. There is no underlying uh, thing that gives it its worth. It is only worth what people say it's worth. Unlike Microsoft stock, you can't possibly deny that it has buildings and it's selling software. So there is some bottom level that the Microsoft stock can possibly be not lower than that modulo debt. On Bitcoin, first of all, the conditional value at risk of Bitcoin is negative 96% last time I checked. That means 1 in 100 chance every year you can lose, on the average, 96%. It could be worse. This is an undeniable fact, right? Like you can ignore not, hey, let me take my house insurance money and go to Italy and blow it on pasta, or I can pay for house insurance. I have a choice. Well, do you want to put your money into Microsoft or into Bitcoin? You can lose 96% of your money. Now, how long are you going to hold this for? Well, you have an urn and it has 99 black balls and one white ball, and you keep drawing it, and it's like Russian roulette. So that's just on a hardcore time series risk. On the other side, Sonny, can you imagine some kind of a disaster scenario where there's just no electricity on Earth? Now, there is no Bitcoin. Whereas with money, I actually have money. I may not be able to go to my ATM, but I do have claims on it. But this thing doesn't exist. So as a personal choice, I have made, like, I can't possibly be involved in that as a professional. Life is too short.
Okay, so
Okay.
Arman, we can move off this topic. Just wanted to say,
Yeah.
Bill Gates, the founder of Microsoft, has referred to Bitcoin as a technical tour de force. Elon Musk holds Bitcoin on the Tesla and SpaceX balance sheet. The United States government is now looking at holding Bitcoin as a national reserve currency. BlackRock, the largest company in the world, Larry Fink has now publicly admitted that I was wrong on Bitcoin. Bitcoin is inversely correlated to the rest of the market and should represent, now they're saying 5 to 10%, which I think is a bit too aggressive.
Okay.
I'm just saying that yes, 12 years ago, taking that stance might have, in my view, been a lot more harder to refute. But today, it's not the math and the physics and the decentralization and the open source nature and the censorship resistance and the inability to print money ad nauseum and addressing the exact externalities that you talk about. That you said as a finance guy, look, 2008 shouldn't happen. But what's the answer? Guess what? The world, Bitcoin in the time that I've known about it has gone from nothing, $10 of Bitcoin to over $100,000. It is the best performing asset in the history of mankind. Right? And so, and to say that, my digital dollars in my bank, oh, well, they're just digits, so therefore it's not money. No, it's money. It's money because humans say it's money, just like Bitcoin. At the end of the day, all things come down to supply and demand. And so I do find it a bit perplexing. I want to keep the focus on your paper, but I would love to do a follow-up on this. I know you
Yeah.
don't love
So
talking
let me
about
just,
it. Yeah, yeah, yeah,
I'll
please.
tell you two things, right? Because, about the cryptocurrency thing. So, first of all,
Wait, not
the
crypto, Bitcoin, Bitcoin,
conditional value
Bitcoin.
at risk of Bitcoin is negative 96%. So Bill Gates can say whatever he wants, but he can't erase the systemic risk that the grandma and the truck driver and the nurse face when their neighbor is telling them to buy Bitcoin. So that's one. Two, there's a lovely novel by Jose Saramago called Blindness. First, one man goes blind, then another, then everyone is blind. And after a while, there's mayhem, and then they start to wake up. So, for me, it is a disservice at scale for highly sophisticated people to be pointing out the doubling of the thing without pointing out the risk of the thing for hard working families. Because no matter if Bitcoin goes to zero tomorrow, Bill still has his Gulfstream, whereas the nurse might not have a retirement fund. And I take that personally. That's all. So we can move on.
Yeah, let's move on. Risk and reward are two sides of a coin as well. If that nurse would have been dollar cost averaging into Bitcoin starting from $10, you could also argue that they would be financially free. Whereas if they're just dollar cost averaging into some stock or mutual fund where they have to pay 2% MER to their managers and barely get anything left over after inflation and taxation, anyways, I used to be a financial advisor. I used to be a life insurance advisor. I used to help people across the dinner table, and my loss in faith and distrust in the existing financial system is what drove me to Bitcoin. Like tens of millions, if not hundreds of millions of young people, tech people. Um, but Arman, I do admire you, the fact that, you're willing to have these difficult discussions. One of the reasons I had you back on the show is because you are thinking at another level, my friend. Like your paper, every time I interact with you, I get this sense that you're not your average cat. And so I just wanted to thank you for even entertaining my topic around Bitcoin. But Armand, where do you want to go with the paper here? I still have a whole bunch of questions queued up. Um, I
Well,
almost feel like
why don't we get to your questions? I mean,
okay,
this
so
is very important. Yeah.
let's keep going. So the next question I had was you say no global summit is needed, right? You say any single nation can embark upon this on their own. Which jurisdiction do you think might be the first to adopt something like this?
Well, you happen to be in Toronto. What's wrong with Canada? Canada has always been a country that has led the world in certain kinds of ethics. In the old days when Pierre Trudeau was around, I was very respectful of the fact that when people travel in the Middle East, they would put a Canadian flag on their backpack, even if they weren't Canadian. That is an asset, right? So why not Canada? Mark Carney is a very intelligent man. He understands finance, and I think he could appreciate The fact that equitable liability is the only fix right now that can fix the capitalist system at this stage systemically and immediately with a free market solution, lest something happens and you have hundreds of millions of people rioting in 5 years or 10.
Let's
You
say
know,
Canada adopts it, Arman. What's stopping a company from re-domiciling to another country just so that they don't have to adopt equitable liability?
so I happen to live in Bermuda for many, many, many years, right? And people would say, well, I'll just move to Bermuda and, pay zero taxes. Well, alas, the OECD and the IRS and all of these Western countries put lovely rules where tax dodging in Bermuda is not something that you go to Bermuda to incorporate for, right? So if you're liability dodging, then the Western governments like the OECD and so on and so forth can very easily pass those kinds of laws so that you can have offshoring of liability. That's easy. These islands will fall into the queue if the big countries pressure them. Now, if you escape to like, I don't know, America, well then, uh, so let's talk about that for a second. Hold on a second. If you are a Canadian company, you have two kinds of shareholders: Canadian shareholders and American shareholders, right? And so if you escape to America and they don't have equitable liability, so you're given limited liability there for free, right? Yeah. So the government of Canada can very easily put some kind of a penalty tax for the products that you sell in Canada, so on and so forth. So
Interesting. Interesting. So you also trace limited li
or the Western countries can be intellectually honest and say, "Oh my, Arman's solution actually is the right one," and adopt it.
Have you brought this idea to these people, like the Carneys of the world? Like, what's your plan, rather, to get it in front of them through podcasting? Are you reaching out directly as well?
So this paper was written in 2005.
Hmm.
In 2008, I wrote to Warren Buffett, Bill Clinton, um, Bill Gates, whom I've met, um, and just said like this is something that we should be talking about. That didn't go anywhere, um, and now I am back trying to do things that are on my desk, right? I have a bunch of stuff that's on my desk, and one of them is equitable liability because the world has gotten worse, not better, vis-a-vis the disconnection between the Wakanskan's interests and Wall Street interests. And so the plan right now is speaking with you and then publishing it, and it's on my website, and starting a conversation. And if people are intellectually honest, then they can ask themselves, are we better off today than we were 20 years ago as regards the impact on this planet of this particular system? No. Okay, then how can we fix it? I mean, for Pete's sake, they raised an entire forest for miles to build a road for COP26 in Brazil. Like, what are we doing? Like they had whatever 25 or 26 it was called. This is a major problem. Until you have stood in clear cuts, until you have seen that it's no longer 200 yards of homeless, fentanyl addicted youth in Vancouver, but it's 3 kilometers now, then you can't argue against this. I'm no better than you, but I have happened to have held those people, and I saw like something's got to give here. Okay. So, I mean,
Yeah.
that's where I'm at with that. So,
So Armand, you trace limited liability back to Roman slaves being used as liability shields. What's most surprising to you when researching the origins of this legal structure? Was there other things you uncovered? I thought that was really interesting.
well, I mean, in the old days, people were equally as smart as us today. They just had longer attention spans. They knew math very well, and in the old days, It was an engineering solution towards allocating risk, you know, for the projects that they were doing. So it just happened to be paid by human lives.
Mm. So in the paper, you also call out big tech, right? I think it's section 230 or something as a liability shield. Would you like how would equitable liability change the economics of these like, social media platforms?
Underage children are being undressed by AI
Mm,
and people are watching it.
mm,
What would be the liability premium on that particular AI system that that particular owner would have to pay today if he continued to engage in this?
mm,
I mean, I'm very direct, right? Like this is happening today. Or or people are committing suicide because on Instagram or Facebook they are being shamed by their middle school friends and stuff. This is a real human toll that is being ignored, and it's a constraint on those mega tech companies to obey whatever regulations people will come in. Under equitable liability, all of a sudden and instantaneously, big tech must behave a little bit better, lest the underwriters put a big old premium on this. Okay? It just fixes itself. I am very, look, one of my former interns is co-head of Gemini at Google. Like another employee was a VP of Facebook when he left me. You know, uh, he was a director of engineering at Google, then he went to Facebook, blah, blah, blah. Like I've been around this particular circus and I understand that fundamentally speaking, they think they know what they want to do and better the world, but the problem is they're not doing that. And it's causing real societal harm. And the only way you can fix this is if you impose a direct cost on that behavior vis-a-vis my proposed solution.
So the AI industry is scaling rapidly right now, right? With potentially massive societal impact. So how would equitable liability apply to, investors that are investing in these like frontier AI companies? I mean, we could be leading to like, forget complete job loss. I mean, there is like a non-zero chance that we go Terminator 2 on everyone, right? So how do you even cost something like how do you build some cost like that into these companies?
The costs will be prohibitive. And therefore
Mm,
AI would not be given autonomy over something that can make Skynet, right?
hmm.
Like it just solves itself. You can flip this
I
idea
like that.
17,000 dimensions and it's still the correct idea. It fixes the system. It aligns the interests of shareholders with the CEO and the board and the stakeholders that are being affected by the products or services of this company. Okay, now let's talk war. If you are a company making airplanes and cluster bombs, right, at the same time, your limited liability premium would be way less if you stopped doing the other stuff. And so there will be an incentive. And I think that we would have less situations where innocent people, especially children, right? Nobody asked to be born a certain word like I am from country X and now I deserve to be bombed, right? I didn't ask to be born a human. I happened to be in Yugoslavia and my hometown burnt after I left. Nobody asks for these things. So why are people being punished at scale for fugazi, right? Like in Italian, fugazi, there's nothing going on, right? So this is where I'm coming from. These are exceptionally dangerous times, Sonny. Okay? Because the frenzy is on AI, Bitcoin, this, that. And in the meantime, a child is getting shot and nobody's talking about that. And so we must have certain level of discourse in our society before the tail risk bites and people pick up pitchforks. I mean, this happens all the time.
So you
Okay?
mentioned war profiteering and defense contractors. So this seems like it would face enormous political resistance, right? So how do you address the national security argument, Arman?
Stop killing people. Okay? Like, what part of the sixth commandment don't you understand? There is no footnote on it. There is no asterisk that says, unless they are in country X, then it's okay. We must stop state sanctioned violence now because it carries a massive amount of tail risk and suffering planet wide. And people must start to snap out of this, right? This is what I'm talking about. There is a psychosis on the planet of believing Maya, the world of words. And I have my 24 axioms that I have written down of what I think what life is, and there's a website for that. And as long as humans are asleep and believing in some illusions, then the planet is going to continue to suffer. What on earth do you mean by Canada? Right? Stop it. It's just people here and we're trying to live our 90 years. Why don't we try to figure out how to be nice to each other for a change? And it happens that we have capitalism, which is lovely because, essentially capitalism works because it's crowdsourced intelligence, as opposed to other systems where there's like one guy in charge, and so it's one brain, and definitely he's wrong, right? So we're trying to fix this system, and the only way it can be fixed is if its constraints become objectives. And so that it works for everybody, it is a realignment of capitalism with the interests of the squirrel and the homeless guy. You understand?
I like it. I like it. So, a finance professional might argue that markets already price risk, right? So risky companies have a higher cost of capital. So what's your response to people who say that?
That's not true because if the company goes bankrupt, who pays the rest of the bill,
Hmm.
right? So markets price that into the share price, okay? They're pricing that you can't lose more. And so equitable liability increases the price because you can lose more. It's just that the underwriter pays it. That's the crux of equitable liability.
But insurance markets have traditionally struggled though with catastrophic and long tail risks, right? Like climate change, for example. So what makes you so confident that, underwriters can actually price these premiums accurately? Because I'd be a bit skeptical as to whether they can do it or not.
Well, there's going to be a bid ask spread on the market for these liability premium, and over a period of time, people who want to make the most money out of it will make the best models. I am very sure that a man like Ken Griffin would figure it out in 6 months. He has enough staff to figure out what a fair price should be,
I
or
think,
people like AIG or AXA and so on and so forth. These
Arman,
things like,
oh, sorry.
Sonny, we can take a book and we can feed it into a machine, and now all of a sudden I can talk to it about all kinds of things. It's 2026. These things can be solved.
I don't doubt it. I don't doubt it. So you said something about how this would create, capitalism worthy of social license. Is this about saving capitalism from itself or fundamentally transforming it into something else?
I think it's both. I think, there's this spider in the Silmarillion by J.R. Tolkien called Ungoliant, and Ungoliant is insatiable, whatever the right word is. It just wants to eat, okay? And at the end, like it's literally in the Silmarillion, in the end, it is said that she was so hungry that she just consumed herself, okay? So growth for growth's sake, in the end, is going to end up consuming the system itself. And you can see it south of our border already, okay? What is happening south of our border is, you know, I just call it the way I see it. 500,000 Americans did not give their lives in World War II for that to be their country now. That's what I say. Like, I think if you ask 500,000 Americans, did you die for this? I think they would say no. So it's consuming itself. So the way you fix this is to stop growth for growth's sake and put a price on behavior. And now all of a sudden it starts to be a force for social good and so on and so forth. That's what I think.
How does this intersect with the rise of autonomous AI systems, right? If AI is making corporate decisions, does that change who bears liability?
You know, that is actually a very, very nice question. Okay. Um, what is AI? Well, it's a bunch of engineers working at some company who code it. Then there's equipment manufacturers. Then there's data center guys. Then there's power companies. Then there's some kind of an app that runs this whole thing. And every one of those companies participates in a chain that makes some product do stuff. And so the underwriters would price the risk in the entire chain and say, this is the spread on that, and that's the spread on that, and you have enabled that to happen, and so on and so forth. So it's not really a standalone thing. You know, it takes a bunch of people and a bunch of companies to deliver you your service. So those companies have to now opt in or opt out AI being programmed to have certain autonomous decisions over Trident warheads or whatever, right? Like it polices itself. You understand the answer?
Yeah, yeah. You've spent a lot of time thinking about this.
Well, I walked 8,000 kilometers
Right,
alone in
right. You did in the
the
forest.
forests of
Okay.
Canada. You know,
Right.
sometimes you have, I made a bunch of audiobooks. It's all in my audiobooks, you know, on my website. All of this stuff I've talked about for hundreds of hours, but I don't profess to know the answers of everything, but I know what the problems are, and I think I have some decent answers for them.
So the name of your company, I think, is Old Norse for dead calm or the stillness, before the storm. So what's the storm you're preparing for, Arman?
Yeah, so I think let's not, so let's just say what you said. So Dowdalong is an Icelandic term that means dead calm. And so why did I choose that? There is no preparedness for any storm. It's not calm before the storm.
Hmm.
I will never forget the first time that I sat in a forest way, way off trail. And all of a sudden, I had like a moment of Zen. I can hear my heartbeat. I can hear my heartbeat. And then I look around and I realize there's nothing going on. There's nothing happening. The world is completely fine. Every critter is minding their own business. And every single one of them has earnestness about what they do. It's called earnest action. Okay. So there is a gentleman who wrote a lovely book called I Am That, Sri Nisargadatta Maharaj. And inside that book, he says, out of all the values in life, earnestness is singly most important. If you have earnestness, you cannot fail. If you do not, has anything really ever worked out? And so I started to look at the natural world as a world where the bear and the wolf have earnestness about what they do. And then it came to me. They embody, they are, they project all the values that the sages and the prophets only wish they had. Earnest action, no ego, no greed, no nothing. And so to me, the word dead calm means a great deal because it was my moment of realization that the actual real world, not the world of the mind of humans, but the world outside, not the world of what if, but the world of what is actually quite beautiful and fine. Nothing's going on. You know, you may be a deer. Some deer get eaten by wolves, but not you. Your life is lovely. And so on and so forth. So then it just so happened that my favorite band of all time that I listened to so much when I was making my photographs, Sigur Rós, who is from Iceland, have a lovely video called Dowdalong, which means dead calm. And it's on my website, on my photo website. And it's lovely because it's set in the temperate rainforest, and the Johnsy sings so beautifully. So it just resonated with me, that particular total silence where you can hear your heart. This is the natural state of man, Sonny.
Mm,
This is the natural state of man, is to be present in
mm,
the now,
mm,
listening to his heart with his kids. Nothing was going on a few, 30,000 years ago, just
hmm.
painting caves all day.
Couldn't agree more, Arman. Couldn't agree more. So if a government minister, help us maybe land this plane, or a parliamentarian is watching this, what's the one thing you want them to take away from all of this?
So you happened to send me that question because that was the most important one. So I actually wrote it down and I am going to read it because it's an important question. Okay. It is the process of life that is supremely important. We are not capable of ever understanding the true nature of nature. We are but a part of it. We live artificially in a world of words, Maya, and these words are causing children to die and cows to cry when they sense they're about to die on a kill floor. I have seen it. I used to work at one. We cannot possibly turn a blind eye to suffering anywhere and risk this 4.5 billion year evolutionary process because we don't understand it. So to be risk averse to the evolutionary process that plays out over millennia, the ministers should do what it takes to de-risk that process. Period. Otherwise, we're gambling literally with the evolution itself. And I will tell you one thing. How did we evolve this intellect to this level in closing? Right? How did we evolve to this level? Not by texting, not by checking Bitcoin, storytelling for hours in our communities. We used to work 2 hours a day on the average, according to the last Opulent Society book, to eat, about 2 hours. What else do you do during the day? You hang out and you storytell prose for hours at length when you're little, listening to your elders. And that's been lost. And so we are already tinkering with our evolutionary process of humans. And this is where I would just say, like, you know, TikTok scrolling and all this other stuff. Guys, you are messing with your mental process right now, and nobody knows how it plays out. And so it's more prudent to be more risk averse and not do that. That's all I have to say.
Arman, you're a great storyteller, and I'm so grateful that you chose to come on the show and share this beautiful worldview that you have. I gotta admit, I can't find too many or any really uh, I can't challenge you. I like to challenge people. Maybe on the Bitcoin front, we'll save that for another talk. But I just love, yeah, I love how you're thinking super big. You're thinking on another level. You're thinking about how the world interacts with one another and how we can create a better one. Yeah, I have three children at home, and I would love nothing more to see them grow up in this beautiful world that you have, this vision that you have, and just seeing them interact with nature as well. I didn't go on an 8,000, what is it, kilometer walk, but I do love my time in nature, and a lot of what you're saying really, really resonates. So I hope people appreciate your point of view.
Two books, if I may recommend, which are kind of cool, is Ishmael by Daniel Quinn. Ishmael is a gorilla, and
Mhm.
it's a Q&A book. Lovely read for people. And Black Elk Speaks. Black Elk Speaks. That is a trip and a half. So I leave it with that, and I am very
Speaking of
happy
which,
to
we
talk to you.
gotta double click on your ayahuasca trip on maybe the follow up. Yeah, maybe we could do another one in a couple weeks. But
Anytime I have nothing but time for you.
awesome, awesome, Armand. Well, have yourself a great day. I'm gonna go have some dinner with the family, and thank you once again.
You bet. Bye.